Hello, everyone. Welcome to the Talks with the ARC Trust webinar series. My name is Sarah Geis, and I'm the Senior Director of Engagement for the ARC Master Trust, a program of the ARC of Indiana. We want to thank you all for watching our webinar series. As a reminder, all of our webinars are recorded and available on our website to watch at any time. To view other webinars in this series, you can go to thearctrust.org and click on the Webinar and Videos button in the banner. In today's webinar, we will be talking about Medicaid estate recovery. We'll review what this is, who is impacted by estate recovery, and what assets are subject to estate recovery. Medicaid estate recovery is the process by which the state of Indiana seeks to recoup, they use the term recover, amounts paid by Medicaid on behalf of an individual who has received Medicaid benefits during their lifetime who meet the criteria for recovery. When a Medicaid recipient dies, the state of Indiana is required by federal and state law to seek reimbursement from the individual's estate. Now, Medicaid is not looking to seek recovery for the entirety of the funds from someone's estate. Medicaid is seeking reimbursement for the funds equal to the amount used to pay for that individual's medical expenses. The funds recovered by Medicaid go back to the state program to help provide for future Medicaid recipients. The Family Social Services Administration, or FSSA, has an estate recovery program that administers the recovery process, called the Indiana Family and Social Services Administration Estate Recovery Program. The estate recovery program will seek to recover the total amount Medicaid has paid on behalf of a Medicaid recipient after they've turned 55 years of age and in certain other limited circumstances. Individuals who are receiving Medicaid benefits through a Medicare savings program like QMB, Qualified Medicare Beneficiary, SLMB, Specified Low Income Medicare Beneficiary, and QI, Qualifying Individual Program. Medicare premiums and Medicare cost-sharing benefits paid for any member are not recoverable. So the individual themselves might still have a recovery claim, but it will not include the cost of the Medicare premiums and cost-sharing benefits of these specific programs. There are accounts that are subject to estate recovery regardless of the age of the individual. One of these scenarios is with a first-party special needs trust, for example, an ARC Master Trust 2 account. A first-party special needs trust is subject to estate recovery regardless of the age of the Medicaid recipient at the time of their passing. Medicaid will seek recovery for the cost of care paid to the individual over the course of their lifetime. The same is true for funds that are held in a Miller Trust, also known as a qualified income trust. So what assets can be recovered? Medicaid defines recoverable assets as assets and property owned by the Medicaid recipient at the time of their death, including real and personal property and non-probate assets. This can include real property, money remaining in a recipient's bank account, money remaining in a recipient's nursing home account, funds remaining in a funeral trust after the funeral has paid in full, ABLE accounts, annuities purchased after May 1st of 2005, and assets in a recoverable trust if the assets were transferred after May 2002. There are assets that cannot be recovered, and these are examples of assets that the Medicaid program cannot recover if these are owned by a Medicaid recipient. So what does recovery look like? The process for filing claims depends on the type of estate administration procedures used. Sometimes a personal representative opens an estate. Once an estate is open for probate, a notice to creditors is published in the legal notices of a local newspaper of general circulation. Typically, after published notification, there is a 5-month period during which creditors of the deceased individual may submit claims against the estate. While the 5-month time limit does not apply to government entities, it is important for Medicaid to submit claims as soon as possible. Medicaid has up to 9 months to submit a claim, but this can be extended in certain circumstances. A systematic and regular review of the legal notices and the probate docket of the county probate court are to be made by Medicaid to see if an estate has been opened for deceased Medicaid recipients. As soon as Medicaid learns that an estate has been opened, Medicaid should initiate the process for filing a claim. There are times when Medicaid recovery claim must be waived for reasons of undue hardship. If the estate recovery claim would result in undue hardship for the heirs of a Medicaid recipient, then the state could waive the estate recovery. There are 4 circumstances in which someone can prove that undue hardship would occur. These are if the recovery would cause the applicant to become eligible for public assistance, if it would cause the applicant to remain dependent on public assistance, if it would result in the complete loss of the applicant's sole source of income and the beneficiary's income does not exceed the federal poverty level, and other compelling circumstances. And when an individual reports these, they would have to describe the other compelling circumstance. For someone to make an undue hardship claim, they must fill out an application form and provide documentation supporting the undue hardship claim. This would be filed with the Office of Medicaid Policy and Planning, or OMPP, for review. OMPP will then determine if the claim would result in hardship. Thank you all again for watching, and we hope that you found this informative. If you have questions or would like to learn more, please visit our website, reach out to us via email or phone, or you're welcome to join us on social media to learn more.